I'll do EU and AU, as there was some interesting price action in AU as well. On the weekly, again, it's not something that I pay that much attention to, but at the start of the week, it's always sort of good to know where you're sitting, sort of relative to the higher time frames. You can see here we got the weekly boss last week whenever we closed below the previous low, so this is our new swing range. We reacted to this sort of refined wick, and then we got the push back up, but you can see we didn't quite hit the refined supply, but it obviously did enough to fill up enough orders to continue bearish, because you can see we got the reaction, then sort of the wicks have pushed up and then pushed down. So yeah, the weekly's bearish. Obviously after a boss we can expect a pullback, so we may get something from this sort of refined wick here, but ultimately the expectation is that this low is going to get run, because ultimately, if you were to look at the monthly chart, it failed to take out this high. So yeah, I would say ultimately that's going to get run, but we're bearish on it in the weekly. On the daily, yeah, we reacted to this sort of demand. Again, refined wick, swept liquidity, made sense. We got the reaction sort of pushed up, and the interesting thing here is this was technically a daily bullish chalk, but if you look at what really happened, it basically just swept the liquidity behind those highs, and then we got a very sharp V-shaped recovery to the downside. So while we didn't, ideally we would have mitigated one of these supply zones in the premium of the leg, you know, price doesn't always do what we want it to do, so you have to sort of be aware of the signal that price has achieved its objective, which in this case was the V-shaped recovery after the sweep of those highs. This was obviously valid demand, as it did technically cause a shock, but you can see we sort of come into it, and then we sort of got a bit of a reaction with the wicks, and then it was always likely that was going to fail. Yeah, so again, daily's bearish, and then 4 hour. Again, the 4 hours bearish overall. That was the swing high, that was the swing low, and then we got the sort of pullback. Now again, this was a bullish 4 hour chalk, and essentially it turned out to be a sweep of liquidity behind those highs as well. So at this point you have to be aware, yeah, the internal structure switched bullish, but overall we're still bearish. So you can see here sort of a lot of momentum up, failed to close above that internal high, which is quite a key detail, as it sort of shows that the buyers ran out of steam whenever it came to taking out that high. But yeah, you can see then came down, had this sort of, that was the bearish chalk, had this sort of flip here where we reacted to that demand, pushed down, reacted to this demand, pulled back into that supply, again pushed down, this reaction failed, reacted to sort of the refined wick here, another pullback, but again just into this newly created supply range. So supply was clearly in control the whole way down. The sell this morning, I think it was around this point here on the M15. So at this point, yeah, you're selling right in the premium of the 4, or right in the discount of the 4 hour leg, but you have these sort of equal lows here to target, and then basically with all this momentum after that sweep of liquidity, bearing in mind the 4 hours bearish, it was always likely that this low was going to get run at a minimum. Then on the M15 this morning, yeah, you can see here we sort of pulled back in, mitigated this flip zone, and then you can see the sort of got an, it's not technically a chalk, it's an eye chalk, but you can see the internal structure switch bearish, and then you can see we're just pulling back in, mitigating supply, demand failing. So this morning when I got to my desk, I had this sort of pivot drawn on. Ideally price would have mitigated that. It caused basically that flip, and that's an eye boss as well, so it did achieve something, so that would have been a good area to look for a sell. I didn't initially have this wick drawn on, but like if you look at it, it's the buy to sell wick that basically caused the eye boss and the flip there, so it is more than valid. So then on the, yeah, again it was counter M15 trend technically, because this was a bullish boss. The M15 did switch bearish bullish, but while this was a strong low on the M15, it was weak on the 4 hour, and usually the 4 hour is going to take precedent over the M15. So I was sort of looking to see if we would get a buy-in opportunity sort of within that wick, to maybe sort of hedge the market both ways, let it show us which way it wants to go rather than trying to predict it. But yeah, it just blew straight through it, so there was absolutely no buy-in opportunity there. Yeah, so we mitigated this wick, and then on the M1, it was at this point whenever I saw sort of, you had the sweep of these sort of equal highs mitigated that there, and then sort of flip V shape, bit of inducement in front of it. So it was at this point that he sort of went out to the M15 and thought and looked for if there was anything that made sense there. But yeah, you can see it's pretty tidy entry model. We flipped this whole sort of range, didn't hit a refined pivot, but again, makes sense. Flip swap liquidity and the extreme is mitigated on it, so it made sense to enter there, and then price just absolutely tanked from there. Again, depending on which way you manage it, 10 or you could have easily targeted the M15 low for a bit more and 4-hour low for a bit more, as it was always likely to get run for reasons I discussed earlier. Continuation wise, you'd have to go very far back in your data to see if that flipped anything on the M1. I think it's literally May last year you would have to go back to. But personally, after an M15 boss, I'm not looking for any M1 continuations, because after a boss, you are expecting a pullback in the M15, perhaps into M15 supply. So that's definitely, as I always say with the M1 continuations, are great when they work, but you absolutely don't want to be trading into anything on the M15. So even that doesn't just mean supply or demand. If you have an M15 boss and you're expecting a pullback, does it really make sense to play the M1 continuations? Because like with the M1 continuations, you're essentially following the M1 trend. So it's the same as when you're following the M15 trend. When do you expect the M15 trend might change? It's whenever you come into something in the 4-hour. So it's the same with the M1 continuations. It's like, do you really want to be following the M1 trend when you're coming into M1 supply or M15 supply, or following an M15 boss or anything like that? Because that's where you're sort of anticipating that you might get a deeper pullback in the M15, which would see the M1 trend change. So it just doesn't really make sense to me to be following the M1 trend sort of when you're trading against anything on the M15. But yeah, it just about makes sense. Like, there's a sweep, it might have flipped. But at this point, whenever we sort of mitigated this 4-hour demand and sort of came back with a V shape, I definitely would have removed my order from that POI if I was inclined to trade it. Obviously, we mitigated this 4-hour demand. It made sense to maybe play the pullback on the M15. But personally, when it's counter 4-hour and counter M15 and counter daily as well, in this case, I want to see at least an M15 chalk. And in this case, we didn't get it. The chalk line was all the way up here, so it was unlikely we were going to get it, but I was happy. That's what my plan says, so I'm happy enough just to follow it. But it does make sense. But a bit too aggressive for me. Maybe you could have looked at some continuation. Like, there's a chalk. Maybe you could have looked at some continuations in there, but yeah, a bit too aggressive for me considering it's counter trend on everything. So yeah, there was a nice sell just at Frankfurt Open, but I think it was literally, yeah, it was just at Frankfurt Open, so you want to have been on the ball to catch it. And then AU, starting the weekly as well. The weekly is interesting because we sort of swept we're bearish still because we failed to get close above this high. So that's the most recent boss. So that's the swing high, that's the swing low. Now we sort of swept this high and mitigated this sort of range in the M1, and this range sort of caused this boss. So it does make sense that there'll be a lot of supply within there. So yeah, even though we've swept liquidity both ways on the weekly and AU, it is still technically bearish. And then this sort of supply, this demand failed as well, and we got a bearish weekly chalk. So it is very possible the bearish weekly trend will continue, and we could potentially run this low. On the daily, yeah, the daily, we did get the bullish boss, so the daily is technically bullish. But then we got the bearish chalk there, and then you can see it's just been demand, pull back into supply, demand failed, pull back into supply, failed. So the internal structure is bearish, so the weekly could take precedence here, and we could end up running this low. And the purpose of this daily chalk may have just been to, or the daily boss may have just been to mitigate the weekly supply. But yeah, obviously the daily and weekly take a long time to play out. There's a lot of buys and sells you can take within that on the 4-hour and the M15. Sort of coming into this, there's a lot of momentum. You can see there's just 3 super bearish candles on the daily. We come into this sort of wick, swept liquidity behind that inside bar, so it was possible that we could sort of see a pullback from here, maybe into sort of mitigate the supply range or whatever. So on the 4-hour, yeah, again you can see we mitigated the 4-hour supply here, and we've just absolutely tanked since. But then we've obviously come into the daily demand, we sort of swept this low, so it does make sense that we could maybe see a pullback from here. But yeah, we could pull back potentially into one of these supply zones in the premium, ideally one of these here. Sort of nested within the daily as well. So didn't really hit on in the 4 hour, but we did sort of sweep this 4 hour liquidity. So it does make sense we could get a pullback. The M15 then, we sort of came into the daily and we got a bullish chalk just there. That sort of inside bar that took the high, took the low, so then that becomes a chalk. So that's your bullish M15 chalk. I wasn't madly in love with this at the time because I was sort of viewing this here as the last supply range. So ideally I wanted to see this sort of high get taken out before I started looking for longs, but that obviously is it is a bullish M15 chalk by the mechanical definition, so it was more than valid to be looking for buys after that. There was an example of it on Friday just where basically we had the M15 chalk, but it basically just mitigated something. Sorry, that's the wrong tool. It mitigated something just within this sort of larger range. So you can see the M15 chalk was there. So yeah, that's your bullish chalk off 4 hour demand, so it made sense, yeah, maybe look for longs, but it did just mitigate something within this sort of M15 range. So again, that's more than valid to be looking for longs, but it's just something I've noticed. Well, I say I've noticed, I have to give Tomas credit because he sort of brought it to my attention. Just like ideally, if you wanted to get long there, you would have wanted to see that whole sort of range get taken out. So ideally that high, but again, look, it's more than valid to keep it mechanical as possible. So it's just something that I've been sort of noticing. So it wasn't mad keen until this sort of high got taken out. There was an M1 entry, but it wouldn't have been tagged with a 2 pip stop. You can see here, you had this sort of sweep of liquidity, V shape. This is your flip. It reacted this here. The M15 chalk and the M1 chalk were in the same place. So that's your M1 chalk, and then obviously you have the flip, the swipe liquidity. So it's valid to enter there. This is the demand that caused the M15 and the M1 chalk, but you wouldn't have been tagged with a 2 pip stop anyway. Now at this point here, that was sort of the high that I wanted to see fail, as this was the M15 supply range. So once we sort of got this here, was potentially looking to see if we would get a confirmation entry from here, this sort of range, but nothing really set up. It sort of, that was the M1 chalk there, but there was just nothing that I was madly in love with that I would want to actually trade. But I didn't really fancy leaving the limit order here because it didn't sweep, so it could easily have just been swept itself and maybe pushed down to mitigate this sort of refined demand range. So I didn't just want to leave the limit order there, and then see you got the chalk there, and then yeah, it wasn't the cleanest. You had the unmitigated pivot, so I didn't really just fancy trading that at the time. But again, it definitely makes sense. This here was more than valid after the M15 chalk, but yeah, I just wasn't massively in love with it myself. I just sort of wanted to see the sort of M15 range taken out, but that's just personal preference. If you used a bigger stop and entered that range, that trade's more than valid. So that is AU and AU. I don't think there's any point in even doing a bit of a look ahead to New York, as I don't think this will be uploaded for a few hours, so it'll probably be obsolete by then. I will post the analysis in the Photon Analysis channel for New York. If you have any questions, as always, just tag me in one of the public channels or drop me a DM, whatever, and I will get back to you. Thanks, guys.